Let's bring the focus back to our markets. Mayuresh Joshi from Angel Broking also joins us on the show. Mayuresh, lots of individual newsmakers talk about, but just talk about the kind of trading action that we've seen this week. It's been volatile. You had that stellar rally on Tuesday, but apart from that, largely on the back foot for the markets. Earnings, of course, continue to take center stage. How do you see market action shaping up going forward from here? Mayuresh, if you can hear me, I was just asking about how what you've made of the market action this week, and what's the kind of direction that markets will take now going forward from here.
So again, I think could not hear you. Sorry for that. But largely, again, we will be determined, at least from a near-term perspective, on what happens globally. To be more specific, what happens with the US presidential elections and the outcome thereof. We'll then start grinding towards whether the Fed will start increasing its rates in the December policy and what really happens with Brexit in the quarter to come after that. So largely, I think the global cues is something that will keep our markets on tenterhooks. So the volatility will very well continue. The earnings, again, in terms of improvement, I think I don't see the earnings improve by the end of Q3. So I think Q4 is when you'll see the earnings pick up actually starting to happen. And over FY18, I think the earnings growth should be a resoundful 14-15%. So I think there's going to be a gradual improvement in earnings as well as the capex cycle for India. Though I think our macros stand out to be the best within the emerging pack. So I think I remain optimistic on the Indian economy as a whole and the markets as well. But largely, I think it has to be stock specific at this point of time. And one really must stagger their investments over the next few weeks to probably reduce their impact cost.
Mayuresh, do you think there's still a likelihood of a new high before the end of the year, or is that off the table for now?
No, again, I think if I have to lay out the probabilities, I think there is an equal chance of us hitting new highs. But again, I think it's dependent on the few factors happening before that. So I think what happens with the presidential elections will again give an impetus for equity markets around the world to probably rally, and the risk on trade continuing. There is no shortage of liquidity. I think liquidity will still flow in abundance, whether it's from the global investors or even from the local investors that we've seen with huge amount of SIPs flowing into mutual funds. So I think liquidity is not a concern at all at this point of time. You can probably argue that valuations are probably fair at this point of time. But largely, again, I think if these factors play out positively as the markets expect, the liquidity-driven risk-on rally might very well continue, and we might very well cross the near-term highs probably before the end of this financial year.
Near-term highs likely in FY17. That's Mayuresh's call. Mohit, just about 15 minutes to go before we wind down trade for today. Which are some of the trades that are catching your eye?
Well, Tata Chemical is one that's doing well in trade today, seeing a nice up move, trading at all-time highs. This can head higher towards levels of 595 to 600 next. It's a buy with a stop loss at levels of 575. Also, Tata Communications is looking good on the charts, seen a good up move in trade today. This can head higher towards levels of 700 next. It's a buy with a stop loss at levels of 675 as well. Apart from that, NCC also seen a good up move in trade, and this is coming out of a long range formation right above the levels of 90. So this can head higher towards levels of 100 next. It's a buy with a stop loss at levels of 89. Lastly, what I also like is Sundaram Fasteners. It's seen a good up move in trade today, and this can head higher towards levels of 335 to 340. It's a buy with a stop loss at levels of 320.
Mayuresh, you alluded to global cues in your opening comment on the markets. One space that is affected by it big time, of course, the IT space. You have HCL Tech earnings, the stock reacting positively to that as well. And more importantly, the company maintained its guidance for the rest of the year at 12 to 14%. In the backdrop of the kind of commentary that we've seen come out of a TCS and a Infi, how important are these HCL Tech results for a directional call on the tech sector as a whole?
No, largely, again, I think the value lies within the tech sector, the large cap IT specifically. And what HCL Tech delivered in terms of commentary, I think they reiterated their stance that they did at the end of Q1. Constant currency guidance maintained between 12 and 14%. The dollar guidance maintained. They maintained their EBITDA margins as well. So to that extent, I think the execution on their key transformational deals that they've been winning over the past so many quarters is going to be a key parameter. The kind of acquisitions that they've done, and the mode strategy here is to probably acquire, and then probably the organic way of growing businesses specifically on digital and cloud through these acquisitions will help them mitigate the probable risk in their traditional businesses. So I think the Volvo acquisition, the Geometric acquisition, the IP-led revenue is expected to flow through from the second half. I think they're largely getting factored into, but largely again, I think the IT sector as a whole will have value buys within them, specifically the large cap names. You're probably seeing some amount of pain still coming through in Q3, Q4 because they're the weakest quarters as far as the IT sector is concerned, specifically in terms of discretionary spending expected to get cut down, prolonged or delayed, specifically on BFSI and energy as verticals. And there are key verticals driving the revenues for these companies. So again, the Brexit hard landing, if it has to happen, I think that can have some amount of repercussions in terms of how the spending patterns will pan out. So expecting weak quarters to come through and better entry points, but obviously the value remains because from an earnings perspective, I think the cash flows these companies generate is still quite huge. And the managements are going to change the pattern. They have already started changing the pattern in terms of digital, cloud. And again, I think as the paradigm shift happens towards these new business lines and verticals, I think the cash flows will improve a few years hence. From a medium-term perspective, they might very well underperform. But again, I think there'll be better entry points, in my opinion, over the next few months. And as a long-term story, I think it is still very, very compelling.
Look to buy IT on declines. That's Mayuresh's call on the space. He was talking about companies changing their business mix to focus more towards cloud and digital. Wipro announced last night they are acquiring a cloud services company for about $500 million. We are also watching out for their earnings post market hours today. Let's get in Shell at this point to talk about those numbers that we can expect from Wipro. Shell.
Right, so when you're looking at Wipro, a slightly subdued quarter is being expected. So the management at the end of the last quarter had given a guidance number, and most analysts are expecting the revenue number to come through this time around at the lower end of the guidance, and hence we are expecting a subdued quarter. A dollar revenue growth that that we are expecting is seen up by 2.3%. Revenues in rupee terms, on the other hand, are seen down by 1.4%, and profits are seen down by almost 4.3%. So these are the major numbers which are being expected. Margins also slightly lower this time this time around at 17.2% versus 17.8% in the last quarter. The margins are largely expected to decline on the back of the impact of the wage hike. The guidance, as I said, management last time around had guided for a 0 to 1% growth for the second quarter, and most analysts are expecting the numbers to come in within this range. The important part that will be announced today will be the guidance for the next quarter, which is Q3, and analysts are expecting a guidance number of 1 to 3% to be announced by the management today. Anything more than that will definitely be taken in a positive manner, anything lesser in a negative manner. Also, just recently, the company has gone and announced an acquisition with Pro, and this is a $500 million acquisition, so it's a big one. So any commentary on this, the rationale for this, and what benefits it will add to the company will also be quite important.
For that, Shell, Mohit, let's just revisit some of these IT stocks. Tech Mahindra, HCL Tech amongst the top gainers in trade today. You also have Infy and a TCS not doing too badly right now.
Well, yeah, Tech Mahindra is coming out of a nice base formation around the levels of 420. It did penetrate it all the way to 408 temporarily for a couple of days, but 420 is a strong support zone for it. It seems like it's kind of from a bottom out here, and we could perhaps see it move up higher towards levels of 450 in the coming couple of sessions because this sector is getting into interest right now. So 450 could be on the cards. You could buy this with a stop loss at levels of 428. As far as HCL Tech goes, that's been the best of the charts amongst the tech spaces, and it's formed a good base formation around the levels of 710 and then again at 800. This has got some kind of resistance around the levels of 850 to 860. But once we get past 860, then even we can head higher towards 940. So HCL Tech is also looking okay on the charts. Infosys also formed a support zone around the levels of 1020, 1015. But we need to break above levels of 1050 first for me to really be giving a buy on Infosys.
Right. Mayuresh, let's also talk about some of those cement earnings. Ultratech markets weren't too enthused by that. You had ACC come in just about an hour ago. The dismal performance on all account. Volumes continue to remain subdued. Realizations also on the back foot. Profit sliding by about half for this counter. Cement as a space, especially mid-cap cement, has garnered a lot of interest over the last 3 to 4 months. What happens to the space right now? Is this just an aberration, and is the outlook likely to continue going forward, or would you expect muted performance ahead as well?
No, again, the large expectations are that if GDP grows around 7.5% for the economy, the cement volume growth should be 1.5 to 2 times of the GDP growth. So I think the minimal expectations are at least 10-11% in terms of volume growth. However, what we've seen so far has been disappointing in terms of dispatches, and you can very well blame it on how the monsoon season has panned out. And again, I think the prolonged monsoon season will entail that the first month of the third quarter also probably will see lower dispatches. Having said that, probably the entire industry has gone through a huge amount of capex over the last 7 to 8 years. So the kind of capex that has actually been done and the kind of capacities that have actually come up, I think no further capex will be required, in my opinion, for the industry as a whole. That's point number one. Point number two, in terms of the core consolidation that we're probably seeing within the industry itself, I think that's testimony to the fact that the kind of pricing discipline that we should get used to, specifically in regions like East, Central, North, I think this pricing discipline should be maintained. We've already seen some pricing stability come through in the southern region. And once I think the demand parameters start going up over the next few quarters, I think this pricing discipline will get maintained and improved thereafter. Third, I think the genuine demand in terms of rural housing, infrastructure pickup, I think that will slowly and steadily pick up. So I think the gradual ramp up that you probably expected to see in volumes is expected to come through. So I think all these factors will now point out to balance sheets in companies where the financial and operating leverage is pretty nice or pretty huge. So in that sense itself, I think leveraged balance sheets is something that is still avoid, and these stocks might have run up and valuations looking extremely expensive at this point of time. I think the companies which can play on this financial and operating leverages is still something that one can bet at. But again, it has to be a perspective of more than 2 years, because I think Q3 the numbers can still be expected to be soft for cement companies overall. But again, I think expecting pricing discipline to start probably getting maintained, and though the raw material aspect is well and truly behind them, with petcoke costs going up, with freight expected to go up on October 1 with new rates coming through as announced by Indian Railways, I think the efficiency will be more on cost optimization. So I think you have to be specific within this sector, but I remain optimistic on the sector as a whole over the next 2 to 3 years.
Power stocks are spiking in the last few minutes. Mohit, you have Tata Power, REC, Power Finance Corporation, all of them spiking in the last few minutes. Look at the move that's come in on a Tata Power, up about 2.5%. NTPC not doing much right now. REC and Power Finance Corporation, both these stocks also sitting at the highs of the day, seeing a spike come in. A quick technical call on some of these names, Mohit?
Sure, Tata Power is looking good in the charts. We could see levels of 88 next year. It's a buy with a stop loss at levels of 82. As far as REC goes, it's part of my list as well, and it's looking good in the charts. This can head higher towards levels of 145 next. It's a buy with a stop loss at 137. PFC and REC normally tend to move together, so even this is looking good in the charts. Seen a fresh up move in trade today. This can head towards levels of 131 to 132. It's a buy with a stop loss at levels of 126.
Mayuresh, autos, of course, a key favorite of the markets right now, and we all know the key triggers for the space, whether it's festive demand or the 7th pay commission uptick. But just your perspective on the valuations of these auto names, do you think that they've possibly run up ahead of fundamentals for now, and the kind of correction that you've seen in some of the names over the last few days could intensify going forward, or is there case for a further upside, let's say from a 6-month to a 1-year perspective?
No, I think the structural story very well remains with auto as well as auto ancillaries as a pack. But largely, yes, you're correct. I think the valuation seems fair at this point of time, and the kind of run-up that we've probably seen over the past few weeks bears testimony to the fact that all the conditions that one really talks about, good monsoon, the 7th pay commission expected to come through, that will give a fillip to volume demand and growth going ahead. I think that is well got gestated by the markets. Now, once the festive season is over, and we've probably seen a lot of push through happening on the dealer end, whether that be four-wheelers or two-wheelers. I think it's really going to be the inherent growth structure and growth story in terms of core demand, and that is what is going to probably drive these stocks ahead. Now, whether these volumes are sustainable once the festive season is over will lay testimony to the fact in terms of how the economy is doing. Interest rates have already started coming down, and with the economy expected to improve with these payouts, I think the volume growth can very well sustain after 2 years of drought that we've probably seen in the system. So largely, I think two-wheelers as a space is something that I'll continue to prefer, but again on decline, because at the current juncture, again, I think the valuations are looking fair. And again, within four-wheelers, I think one really needs to be stock specific at this point of time. A few stocks definitely have run ahead of their fundamentals at this point of time, but largely, again, I think, as I said, two-wheelers as a story is something that I'll continue to prefer and like in these markets.
Markets have picked up steam in the last 5 to 10 minutes right now, completely erasing all losses of the day on the Nifty. There you have it, just about back at those 8,700 levels right now. Sensex 2 erasing all those gains. RIL is the top contributor to the gains right now. So you have seen a recovery for RIL as well, and that's helping the markets recover right now. ICICI Bank too attempting some kind of a recovery as we speak. So markets erasing some of those early losses that we've seen in trade. Mohit, just before we down trade for today, any other trades that you want to run us through?
Well, IRNFS transport is looking good in the chart, seen a good up move in trade today. This can head higher towards levels of 118. Next, it's a buy with a stop loss at 108. Also, PI Industries, after correction, after moving sideways to downward for the last couple of weeks, we've seen a nice uptake in trade today. The charts are still very strong. This can head higher towards levels of 840 to 845. It's a buy with a stop loss at levels of 800.
All right, Mohit, Mayuresh, just hold your thoughts as we wind down trade for today. Just about a minute to go before we shut shop with news that markets have erased all their losses and the Nifty is just below that 8,700 mark. So back to where we started for trade today. For the week, though, it's been a bit of a volatile week. You had that sharp run-up that came in on the markets on Tuesday, but after that, markets were on the back foot. Right now, you've seen some kind of a recovery come in. So for the week, Nifty is going to be seeing gains of about 1% if it does manage to hold 8,700 at close, or rather reclaim 8,700 at close. But all the action today lay with the tech space, especially on the earnings reaction that played out on an HCL Tech. And on back of that, you had a positive rub-off come in for a Tech Mahindra, an Infosys and a TCS as well. Idea seeing smart gains, and this too happened towards the last half an hour of trade. In fact, all telecom stocks were buzzing towards that. Even Arcom saw smart gains, as also Tata Com from that space. Tech Mahindra, like I said, did well. Tata Power picked up momentum in the last 15 minutes of trade, so that's seen gains of about 2% come in as well. Some of the other stocks that did well, IndusInd Bank, this was amongst the top losers in trade yesterday, as also in HDFC Bank. Both these stocks are gaining about 1.5% each. HUL bouncing back in today's trade as well. Dr. Reddy's too had some kind of a positive impact. Stocks that didn't look good, Ambuja Cement on the back of earnings fell about almost 4% at one point, did recover, but still down by about 2.3% at close. Axis Bank saw further cuts today come in, going down by about 2.5%. Hindalco was weak in trade today, as also a Cipla. ACC, pardon me, I was talking about Ambuja over there. ACC earnings, so that's the impact that played out. RIL on the back of earnings reaction, that was down by about 2% in trade today as well. HDFC, another weekday for this one, down by about 1.6%. In Bharti Infratel continues its downward slide. Grasim was weak in trade today as well. So that was the print as far as the benchmarks were concerned. Let's also shift focus and see how mid-caps performed in trade today. You had select stocks that did well on the back of earnings reaction coming in. But it was a good day for something like an NCC that saw gains of over 11%. Tata Com, as I mentioned, up by about 5%. IDBI had a good day in trade, as also PI Industries. Hexaware saw gains of about 2.5% as well. Exide Industries did well. IRB Infra was up 2.5%. Biocon earnings impact on this one as well, up by about 2.5%. That was largely the print. Tata Chem, Mohit had a trade call on this one, gained by over 2%, as also Jet Airways. Some stocks that were on the back foot included the likes of a Titan, a Bajaj Finserv, a Jubilant Food and a Suzlon. But on the whole, you saw a smart recovery come in the markets in the last hour of trade. Nifty reclaiming about 45 odd points, didn't manage to hold 8700, but moved towards 8690 to erase most of the losses that it saw in trade today. Mayuresh, going forward, any spaces or sectors that you want to leave us with that we should be watching out for, which will offer value to investors? It could be something in the large cap space or even some of the mid cap names that you like.
No, largely as spaces, my own sense is that if one really has a view of more than 2.5 years, transformers as a space is something that I'll continue to like. I think you've seen huge amount of underperformance because capacities have built up. There were huge amount of working constraint problems on the balance sheet. The return ratios had fallen significantly. But with new standards coming through, with order flows expected to flow at a very fast pace, the two central government schemes aiding the order flows going ahead, in my opinion. Again, I think the return ratio is expected to rebound in a very strong fashion. The margins are expected to rebound in a strong fashion as well. So my own sense is transformers as a space and specific stocks within the space look very, very attractive. And the other space that I'll probably watch out for within the oil and gas space would be city distribution gas companies. Largely, again, I think good volume performance so far. With the kind of expansion that they've done, you might expect some muted quarters because the kind of depreciation that they'll take a hit on their balance sheet. But with falling gas prices, falling RLNG prices, you're definitely going to see improvement in margins come through, and that will probably reflect on their earnings parameter as well. So I think within the oil and gas space, I think city gas distribution companies is something that I'll continue to prefer.
In fact, we also had some brokerage commentary come in for the likes of GAIL and MGL earlier this week, talking about some of those upside benefits that Mayuresh just mentioned. Mohit, smart recovery in the last 10-15 minutes of trade, but 8700 still remains elusive. What's the outlook for next week? We are, of course, also watching out for expiry.
Well, the way I look at the Nifty, we're broadly trading above levels of 8635, which is this support zone. Now, as long as we're above these levels, we should be mildly bullish. And even if we're seeing some weakness, it's being bought into at the end of the day. It's no momentum behind the down move that we're seeing. So even if we keep drifting lower or sideways in the coming few weeks, it's like we're building steam above the crucial levels of 8500 where we bounced up from. So broadly, as long as we trade above 8500, the buy should be bullish. If we are wasting time, spending some time trading sideways and then recovering at the end of the day, I'm more than happy because we're not breaking lower. And we're trying to build steam, and hopefully in the coming few weeks, we break up above levels of 8750 to 8800 and head towards 9,000, 9100 and then all-time highs. So on the whole, market's still holding up well. The buys should be bullish. You should be looking to buy into stocks which are trending smartly and trade on the long side.
Trade on the long side, that's Mohit's technical call on the markets. Mayuresh, Mohit, thank you for speaking to us on BTVI in trading day today. Have a good weekend, both of you. With that, completely out of time. Up next, it's time for Market Guru.